You know, every single day, trillions, trillions of dollars move across the globe. But how does that actually happen? It's not magic. Today, we're going to pull back the curtain on the hidden machinery that makes our entire global economy tick. All right, let's dive in.
So it really all starts with this one question. When you send money to family overseas, or you buy something online from another country, who's actually pulling the levers? Who's in charge of all this?
Well, the answer isn't some single person or some secret company. It's a vast, interconnected system that pretty much operates behind the scenes. A financial web that, honestly, most of us use every single day without ever really seeing it.
So let's start by just mapping out this incredible network. Because really, this is the foundation for everything. We're talking about everything from the coffee beans that made your morning cup to the massive international business deals you read about online. This global web basically has three main layers. At the bottom, you've got the commercial banks we all know and use. You know, your local branch. Then there are these big international institutions that handle things like development loans. But sitting right at the very top, kind of coordinating and regulating the whole shebang, are the central banks. And I want to be clear, this isn't just some abstract idea. The stakes are unbelievably high. Without this organized network that allows money to move safely and reliably across borders, international trade and investment as we know it would just grind to a halt.
And that right there brings us to the main character in our story, the institution that sits at the very center of this web. You could call it the system's hidden architect.
So this architect is the central bank. The easiest way to think of it is as the bank for all the other banks in a country. We're talking about huge institutions like the US Federal Reserve or the European Central Bank. They are the ultimate financial authorities for their economies.
You can see the power structure here really clearly. A central bank isn't just another bank. It sits right at the top of the pyramid. It sets the rules that all the commercial banks down at the base have to play by.
Okay, so what does it actually do? Well, its job really boils down to three crucial functions. First, it's the referee. It regulates the whole system to keep it stable. Second, it controls the country's money supply, and I mean literally how much cash is flowing through the economy. And third, it has this critical emergency function, and we'll definitely get to that in a minute.
That raises a pretty big question. How in the world does one institution control something as massive as a whole nation's money supply? I mean, they can't just print money whenever they feel like it, right? Nope. They have a very specific and very powerful toolkit.
And this toolkit has three main instruments. They can set interest rates, they can define what are called reserve requirements, and they can conduct something known as open market operations. So let's break each of those down.
Okay, this first tool is the one you've probably heard the most about. By raising or lowering interest rates, a central bank makes it either more expensive or cheaper for you and for businesses to borrow money. This is their main lever for either cooling down an overheating economy or trying to stimulate a sluggish one.
The second tool is a little more technical, but it's just as powerful. The central bank basically tells commercial banks, hey, you have to keep a certain percentage of your deposits on hand, in reserve. By changing that percentage, they can directly control how much money banks are able to lend out into the economy.
And the third tool is maybe the most direct of them all. Open market operations is really just a fancy term for the central bank buying or selling government bonds. See, when they buy bonds, they're injecting cash into the banking system. And when they sell them, they're pulling cash out. It's almost like a faucet for the entire money supply.
All right, so that's how they manage the system when everything's running smoothly. But their most critical role, well, that often comes when things go wrong. In effect, they are the economy's financial firefighters.
So what happens when there's a panic? You know, when confidence in the system just evaporates and everyone makes a run for the exits, trying to pull their money out all at once.
This is exactly where that emergency function comes in. Just think back to the 2008 financial crisis. When commercial banks were on the verge of totally collapsing because they were running out of cash, the central bank stepped in. They provided these massive emergency loans to stop a domino effect from taking down the whole economy. This is what it means to be the lender of last resort.
But you know, in our incredibly interconnected world, a crisis in one country can spread to others like wildfire. A fire in one house can threaten the entire neighborhood. And that's exactly why central banks can't afford to just act in isolation.
This is where the Bank for International Settlements, or the BIS, comes into play. It's based in Switzerland, and it's essentially the central bank for all the world's central banks. It's like a club where the heads of the Fed, the ECB, and others all meet to coordinate what they're doing and manage risks that cross borders. Now, I know this might all seem very high level, right? Stuff happening in fancy boardrooms far, far away. But the decisions made by these institutions have a direct, tangible impact on your everyday life, on your pocket.
Seriously, look at this. The interest rate on your car loan or your mortgage, yeah, that's heavily influenced by the central bank. Whether it's easy or hard to get a credit card, that's them too. Even the price you pay for imported goods is affected by their decisions on things like exchange rates and inflation. It touches everything.
And this gets to the real heart of it all. We tend to think of these institutions as quiet, maybe a little boring, technical, but their role goes so far beyond just managing the mechanics of money.
The choices they make can literally determine whether a country's economy booms or busts. They can influence the flow of investment around the entire globe and, in doing so, subtly shift the balance of economic power between nations. It's a huge deal.
So the next time you hear on the news about interest rates changing or a financial crisis brewing somewhere in the world, you'll know about the hidden architects working behind the scenes, in a system that's invisible to most of us, but is absolutely essential to our modern world.